As most know, Robert Kiyosaki's formative years were significantly influenced by two paternal figures. His biological father, or poor dad, was a well-educated and hardworking individual who held a stable job in education. Despite his academic achievements and professional career, he struggled with financial issues throughout his life. This experience offered Kiyosaki first-hand insight into the limitations of traditional employment and conventional financial wisdom. In stark contrast, his rich dad, the father of his childhood best friend, was a successful entrepreneur. He lacked formal education, but possessed a keen understanding of business and investing. This juxtaposition between the two father figures provided Kiyosaki with a unique perspective on wealth and financial management. He observed that while his poor dad emphasized the importance of traditional education and a stable career, his rich dad focused on financial education and the power of investing. These early experiences laid the foundation for Kiyosaki's future philosophies and teachings. They shaped his belief that financial success comes not just from academic knowledge or hard work, but from an understanding of how money works and how to make it work in one's favor. Philosophy and key concepts. Financial education. Kiyosaki passionately believes that the lack of financial education is a major gap in the traditional schooling system. He argues that while schools teach various academic and professional skills, they fall short in teaching students how to manage money, invest, and build wealth. Kiyosaki advocates for a self-directed approach to learning about finances. He suggests reading books on personal finance, attending seminars, listening to podcasts, and seeking mentorship from successful investors and entrepreneurs. This approach to financial education is not just about acquiring knowledge, but also about changing one's mindset towards money. Kiyosaki emphasizes the need to think like an investor or a business owner rather than an employee. This shift in mindset involves understanding how to create and manage wealth, assess risks, and take advantage of opportunities. Investing. Kiyosaki's approach to investing is centered around the concept of generating passive income through smart investments. He advocates for a diversified investment strategy that includes real estate, stocks, bonds, and mutual funds. Real estate, in particular, is often highlighted in his teachings as a powerful tool for building wealth. He encourages people to invest in properties that generate rental income, which can provide a steady stream of passive earnings. Kiyosaki also stresses the importance of understanding the market and economic cycles. He advises investors to be cautious and to avoid jumping into investments without proper research and understanding. The goal, according to Kiyosaki, is to build a portfolio of income-generating assets gradually, which over time can provide financial security and independence. Entrepreneurship, which is a key component of Kiyosaki's wealth-building strategy. He believes that starting and owning a business is one of the most effective paths to creating significant wealth. Entrepreneurship allows individuals to leverage their unique skills, ideas, and creativity to generate income. It also provides opportunities to create assets, such as a successful brand or business model that can continue to generate income over time. Kiyosaki encourages aspiring entrepreneurs to start small and to learn from their experiences. He believes that the skills and lessons learned from running a business are invaluable and can be applied to other areas of financial and personal growth. Entrepreneurship, in Kiyosaki's view, is not just about making money, but also about developing a mindset of independence, creativity, and resilience. Mindset. The mental aspect of financial success is a constant theme in Kiyosaki's teachings. He often speaks about the importance of overcoming fear, especially the fear of losing money. According to Kiyosaki, this fear holds many people back from taking the necessary steps to build wealth. He advocates for a mindset of openness, willingness to learn, and resilience. Kiyosaki also emphasizes the importance of setting goals and having a vision for one's financial future. He believes that a clear vision and strong goals can motivate individuals to take action and persist in the face of challenges. Additionally, he stresses the importance of being adaptable and ready to change strategies as markets and opportunities evolve. Criticisms and controversies. Kiyosaki's teachings, while popular, have not been without controversy. Some critics argue that his advice is overly simplistic and doesn't adequately address the complexities of investing and personal finance. They caution that some of his strategies, particularly those involving real estate and market timing, can be risky, especially for inexperienced investors. There have also been questions raised about the veracity of Kiyosaki's rich dad story. Some have speculated that this figure is a fictional composite rather than a real person, which Kiyosaki has sometimes seemed to imply. This has led to discussions about the nature of his advice and whether it should be taken as literal guidance or more as motivational philosophy. Furthermore, Kiyosaki's involvement in various business ventures, including some that have faced legal issues, has also attracted criticism. Some of these ventures have been accused of being overpriced or misleading, raising concerns about the ethics and validity of his broader financial advice. Impact and legacy. Despite these criticisms, the impact of Robert Kiyosaki's work on personal finance and wealth building is substantial. His book, Rich Dad, Poor Dad, has sold millions of copies worldwide and has been translated into numerous languages. It has become a fundamental text for many seeking financial education and has inspired a generation of investors and entrepreneurs. Kiyosaki's teachings have demystified complex financial concepts and made them accessible to a broad audience. He has been a vocal advocate for financial independence and has inspired many to rethink their approach to money, work, and life. His emphasis on financial education and the importance of understanding money has contributed to a greater public interest in personal finance and investing. His legacy is a mixed one, combining valuable insights into wealth building with controversial opinions and strategies. However, his influence on the field of personal finance is undeniable, and his work continues to be a starting point for many on their journey to financial literacy and independence. How to apply Kiyosaki's principles. Educate yourself thoroughly. Dive deep into the world of personal finance and investing. Read extensively, not just Kiyosaki's books, but also a wide range of materials from different financial experts. Attend seminars and webinars, join investment clubs, and engage in discussions with experienced investors. Start small and scale up. Begin your investment journey within your means. Start with small investments, and as you gain confidence and experience, gradually increase your investment portfolio. This approach reduces risk and provides learning opportunities. Focus on income-generating assets. Look for opportunities that will provide a steady stream of income. This could be rental properties, dividend stocks, or a side business. The goal is to create a portfolio that generates enough income to cover your expenses, leading to financial independence. Embrace and manage risk. Understand that risk is an inherent part of investing and wealth building. Learn to analyze and manage risks effectively. This means not shying away from opportunities because of fear, but also not jumping into risky investments without proper due diligence. Develop an entrepreneurial mindset. Cultivate a mindset that is innovative, proactive, and resilient. Look for opportunities to solve problems or meet unfulfilled needs in the market. Be ready to adapt and pivot as necessary and learn from both successes and failures. Be resilient and persistent. Accept that the path to financial success is often non-linear and filled with challenges. Use setbacks and failures as learning experiences and stay committed to your long-term goals. Build a strong network. Surround yourself with like-minded individuals who share your financial goals and aspirations. A strong network can provide support, advice, and potential business or investment opportunities. Stay informed and adaptable. The financial world is dynamic, and strategies that work today may not be effective tomorrow. Stay informed about market trends, economic changes, and new investment strategies. Be willing to adapt your approach as needed. Applying Robert Kiyosaki's principles involves a combination of education, strategic investment, entrepreneurship, and the right mindset. His approach emphasizes the importance of financial literacy, the cultivation of income-generating assets, and the development of resilience and adaptability in the face of financial challenges. While his methods and advice should be critically assessed and adapted to individual circumstances, they provide a foundational guide for those seeking to build wealth and achieve financial independence.